Good morning, everyone. Sorry for the slight delay here. I hope everyone is doing well. Happy Tuesday, March 19th here, as we're getting ready for one of the most eventful things that we've seen in quite some time. Now, we saw no more negativity in the Japanese rates, right? The BOJ for the first time, right, in 17 years. It took nearly a decade for the Bank of Japan to finally call it time on negative interest rates. The first time in 17 years that we've seen a hike out of the BOJ. As we have it, right, we have the expectation of the Federal Reserve that comes out this week as well with high expectancy, 99%, that we're not going to change rates. Now, we're honestly seeing the decrease in the expected probability of the Fed increasing rates, or sorry, I keep getting this confused. We've been increasing for so long, but I mean decreasing rates, cutting rates, right? That probability continues to drop as we get closer and closer to the following meeting. So this is the meeting to wrap up the quarter, coming out tomorrow afternoon with the Federal Reserve. Jay Powell is going to go on the wire. But before that, we had the BOJ, right? They haven't raised rates in almost 17 years, right? Giving investors some more to chew on the overnight session. The central bank will also dismantle yield curve control, which ensures that the monetary policy remained loose by holding down the 10-year yield. The BOJ is also ditching purchases of risk assets like ETFs and REITs while reducing purchases of commercial paper and corporate bonds. So if we look at this, the decision marks the end of a global era of cheap money that began in the 2010s and was employed across Europe and Japan. NERP focused on reflating growth along with massive monetary stimulus, but inflationary pressures since the COVID pandemic and war in Ukraine resulted in aggressive tightening cycles. The Bank of Japan had been the last remaining holdout, with policymakers viewing recent price increases as imported from elsewhere, but the stance has now formally come to an end. Helping to tame the market reaction after its latest decision, the BOJ telegraphed some of its intentions ahead of time, like the tweaking of its YCC stance. While the yen fell to 150 per the dollar overnight, it didn't hamper the gains for the Nikkei, which continued its record run in 2024, up now, what is it? I believe close to 20%. If we take a look at this, right, the Nikkei, you can see right about this time we got that result out of the BOJ on the 5 minute here with the Nikkei futures, and nice little pop to continue this little pullback. We're not necessarily at all-time highs right now, but still holding out fairly well. The move towards policy normalization also suggests that the BOJ is confident it has emerged from the threat of deflation. Any rate increases over the medium term are likely to be gradual. So what the BOJ, right, Governor Kazuo Ueda said, we will continue to buy roughly the same amount of bonds in the past, right? This was said during the press conference. As for the future, we will at some point shrinking our balance sheet given we've ended our extraordinary monetary policy easing. But I don't have any specific idea in mind on whether the next hike will proceed a tapering in our bond buying or reducing in our balance sheet or vice versa. Long story short, expecting another hike out of the BOJ to continue this non-negative rate movement. So we talked about this yesterday with NVIDIA. NVIDIA at the end of the session made several announcements at its high anticipated GTC developer press conference, including pushing the world into accelerated computing that has reached the tipping point. We're going to have to build an even bigger GPUs. Hopper is fantastic, but we need bigger GPUs. This is what Jensen Huang, the CEO, said. Introducing the new Blackwell GPU model as well as the new GB200 super chip. Now, I'm not necessarily an expert in these chips. I don't pretend to be an AI as well, but I just saw pictures of it. One was bigger than the other. That's the difference I saw. NVIDIA right now is down pre-market here as the equity market's pulling back a little, something that we'll talk about. But realistically, right, I'm very cautious about these head fakes of trending moves into the Federal Reserve tomorrow. We also saw, remember yesterday, Google and Apple in discussion to fit Google's Gemini into the iPhone, and is also reportedly considering using OpenAI's AI model. So Apple yesterday started off pretty well, pulled back very aggressively. Goog as well, not Google. Goog again, same thing, right? Gapped up, super aggressively pulling down right now. They're gapping a bit higher in comparison to some of these other equities. So something to watch. I think that Apple is going to be a close watch. I think that Apple, like I've talked about before, has seen a lot of this downside, and I'm expecting to see some kind of upside momentum from here. I think the head fakes, especially leading into the FOMC, are going to be to the downside, and I think these trending moves from the overnight, right, suggesting downside behavior to get bought up. So something that I'll talk about in just a bit. But from other news, there's not too much. The FOMC meeting begins today, technically, but we get everything that we're waiting for tomorrow. So that's going to be interesting. What else do we have today? Not too much necessarily. Started this a little later, but let's take a look at the S&P 500 here. The S&P 500, we had a little push to the downside, and as you remember, the prior distribution top, right, actually sits at this 90, right, low 90 area, 51.90. This is one of the last chance for the dip buyers to come in, and they're trying to hold that out. I thought that yesterday into the close there would be some bearish continuation, which we saw. Coming down to 51.90 wasn't that expected. I would just caution for the bears to be careful with this, right? Seeing it down so much pre-market before the FOMC, just be careful with the trend. I think there's a high probability we just stay in balance, meaning that we're going to try to maybe hold a bid, try to move back above that 52.0810 area, and then just stay sideways. So I'm going to be very cautious leading into the FOMC announcement today, which is going to be tomorrow. I think there's going to be more fireworks from that. I think the real case for the bear is going to be under this 51.90 realistically. There are some cases under this 52.10, but I think that we just hold a major balance for today's session realistically. We'll be watching that as that transpires on tomorrow's session. Other than that, there's not really too much to add. BOJ was at the top of the list that made news. You can look at the the USD-JPY aggressively rallying higher on that news, right? US dollar strengthening pretty hard here. From that as we come back into some of these larger resistance points. But if you're a Forex trader, just that's something that you should have been looking at on the overnight. Keep an eye on this. I think there's going to be a little more volatility. And then into the US dollar in itself coming into the FOMC tomorrow, along with futures. So with that, I'll have eyes on NVIDIA to see if they try to bid that up, because that one cannot stay down for too long. And I want to see if there's bids that come in generally in tech today and the overall equity market at those pretty much yesterday's lows and the overnight lows. If those can hold, we can potentially see that next leg higher. So let's open up our live trading room here. I'll see you guys in our Zoom. We'll do this again tomorrow and the end of the week. And I bid you all farewell. Enjoy the remainder of the day. Trade smaller. We're coming into the FOMC tomorrow. You don't want to go crazy with this. You have to understand that a lot of the moves and a lot of the action, a lot of people are waiting for that tomorrow, realistically, right? They're waiting for those moves that are going to transpire tomorrow after, right, the morning session. So you don't want to go crazy with it, getting too positioned or too biased into something that generally leads with a balance. So with that being said, check us out, TradeProAcademy.com. We got a lot of stuff coming out, a lot of new stuff as well. So I'll see you guys in there, and we'll do this again.